Good morning and a warm welcome. Holly Shield here for Kalkine TV, reporting to you live from Sydney, and you're watching the Global Markets Roundup. Let's dive into some key highlights and happenings from Friday last week, starting with the US market. Well, global equity markets rallied on the 12th, with European shares hitting new highs on strong earnings, while the dollar eased but posted its biggest weekly gain since late August. And the MSCI's All-Country World Index closed up 0.64% as France's CAC 40 Index and Germany's DAX also ended at record closing highs. Meanwhile, the benchmark US indices closed the week on a positive note, lifted by tech and basic materials stocks after the Federal Reserve said it'll keep interest rates low for now. The S&P 500 was up 0.72%, while the Dow Jones closed 0.50%. And the Nasdaq Composite was up as well, 1%, and small cap Russell's 2000 climbed 0.11%. While investors are breathing a sigh of relief now, there were worries of interest rate increases after new CPI data showed that inflation rose to a 30-year high in October. Although economists now expect a rate hike by mid next year to handle these rising prices. And on Friday, New York Fed President John Williams said higher inflation does not affect all households equally, but people on a fixed income took a bigger hit. Meanwhile, the latest Labor Department data showed that there have been more than 10 billion job openings since June, but the continued worker shortage might further fuel inflation. And communication, tech, and basic material stocks were the top gainers on the S&P 500 index on Friday, while on the flip side, utilities, financials, and the energy stocks declined. And 8 of the 11 sectors stayed in green. Meanwhile, White House National Security Advisor Jake Sullivan has declared that the US has taken a big bet on an alliance by promising to share nuclear submarine technology with Australia under the UK-US Security Pact. Mr. Sullivan went on to explain that the Biden administration was intent on replenishing America's diplomacy and domestic strengths while turning the page on overemphasis of military engagement. So it goes without saying that we'll all be keeping a close eye on the developments. Now it's time for a short break, but stay tuned because I'll be right back with UK and Australian market updates.
Hi there, James Preston for Kalkine TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google to brand new tech startups vying for your attention. Kalkine's Tech Beat has the latest in what matters in the world of technology. Join me every single Thursday on The Tech Beat, exclusive to Kalkine TV.
Welcome back, I'm Holly and you're watching the Global Markets Roundup. Well, European shares closed their 6th straight week of gains at a new high on Friday as strong results from the Carter owner Richmond rounded off a robust earnings season. The Pan-European Stoxx 600 index rose 0.3% and added 0.7% for the week, finishing at record highs in 4 of the 5 sessions this week. And London equities dived into the red in the terminal trades, with the benchmark FTSE 100 slipping into negative territory after briefly retaking the 7,400 position after a stretch of more than 20 months. Meanwhile, shares of AstraZeneca counterbalanced all the other gains and upticks as the stock collapsed more than 7% after the company provided a muted outlook for this upcoming quarter. In fact, the stock of the market cap leader has suffered a loss of more than 7% after 19 months. Early in March of 2020, shares of AstraZeneca crashed over 9% in a market-wide sell-off led by the widespread worries of the COVID-19 pandemic. Given the weakness of heavyweight shares, the headline FTSE 100 traded 0.49% lower. Meanwhile, the mid-cap stock indicator FTSE 250 was flat. Over to Asia now, and Japanese shares ended higher on Friday, underpinned by tech stocks, as investors bought into a domestic market that's lagged behind a global rally on concerns about the growing impact of the rising costs on corporate earnings. And all this as the Nikkei share average rose 1.13%, extending gains for a second session, while the broader topics advanced 1.31%. Both indexes closed flat for the week. And in China, Chinese blue chip stocks closed lower on Friday, as shares of real estate developers retreated from a buying frenzy in the previous session, fanned out by bets on policy easing in the property sector. The blue chip CS1300 index ended 0.2% lower, while the Shanghai Composite Index rose 0.2% as well. Meanwhile, South Korean shares rose, helped by gains in Chinese stocks, but logged a fourth weekly decline as glowing inflationary risks and hiccups in the global supply chain dented the risk appetite. The benchmark Kospi rose 1.50%, although for the week the index declined 0.016% as well. And the ASX 200 closed 0.8% higher on Friday as the dollar slid 0.046%. The euro eased 0.08%, while the yen edged up 0.14% lower. Oil prices fell on concerns that the US may release oil from the strategic reserves to cool prices. Brent crude futures fell 0.8%, and West Texas Intermediate crude fell 1% to settle at just over $80 a barrel. Gold prices rose on Friday and were on track to post their best ever week in 6 months, with bullion's appeal as an inflation hedge burnished by a surge in US consumer prices. And gold futures settled up 0.3% at just over $1,800 per ounce. The most traded iron for January delivery on China's Dalian Commodity Exchange ended 1.6% lower. And Bitcoin as well fell 0.92%. Though making headlines, Incitec's pivot net profit after tax surged 91% from a year earlier to $359 million in the financial year 21. Statutory NPAT, including IMIs, was at $149 million, up 21% from the 2020 financial year. Meanwhile, the Lincoln Administration Board will provide Carlyle Group with due diligence on a non-exclusive basis. Now, to end on a lighter note, we all know of the human quest for space, but this time, along with the crew, we're sending a cartoon character toy to the moon, Mars, and beyond. Snoopy. Yes, a new rocket designed to send humans to space will be launching next year from the Kennedy Space Center in the US. And on board will be a familiar plush toy. What an adventure. With that said, that is just about all for now on the show, but keep watching Kalkine TV because we have many more market updates lined up for you today. Holly Shields signing off.